Good morning, everyone. Welcome to the official YouTube channel of Officer Sarah 24/7. So, first of all, let me know how are you all, as well as let me know is audio and video both are okay. Are we good to go? So, every day at 6 a.m. we all are meeting for your PPB session, that is Principles and Practices of Banking. And as I keep saying that the PPB have biggest syllabus. It have 4 units, 4 modules, 55 units are there. And if we talk about these 55 unit, it has a lot of syllabus with it. So you can see there are 1000 pages book that we have to cover in the PPB, and that was provided by IABF. And trust me, each and every page of your book is very important. And this 1000 pages book is double-sided book, so it means you can easily understand how much we have to cover. So that's why do make sure, if you haven't started preparing conceptual understanding or the conceptual clarity of your topics for all the 4 subjects, then do start it as SAP, because a lot of things are there, a lot of syllabus is there, a lot of revision, practice, everything is there. So do not waste your time. Be very careful while you start your preparation. Do the conceptual understanding study. Second, do make sure you are revising properly on the regular basis. And third, practice your paper. These are the 3 things which is required to clear this paper with the consistency. So do make sure you start early. Okay, so let's start the session. Before starting or moving towards the class, I will be your mentor for IE, IFS and PPB for JAIIB exam. This is your paper 1 and paper 2 for the JAIIB, and here we are going to discuss, this is your class number 12. It means till now we have discussed the 12 units of your module A. Hana, we have completed the 12 units of your module A. This is the 12th unit, and total units in the module A you will have 21 units. Okay, so we have to cover each and every unit every day. Now you can see today's unit's topic is payment and collection of checks and other negotiable instrument. That is your unit number 12 of module A. So as always, first let's discuss something about this particular chapter, then we will move towards the questions. So when it comes to the payment and collection of check and negotiable instruments, let's talk about the negotiable instrument first. Negotiable instruments are the transferable instrument. What are negotiable instruments? They are transferable instrument which can be used for the payment purpose from one party to another. They are the transferable instrument. Now, if I talk about the transferable instrument, it means what? Whenever you want, you can provide that document to the another person for making your payments. In case of negotiable instrument, there is an act that is named as Negotiable Instrument Act 1881. It has defined that what are the negotiable instrument right now we are using. So in the section 13 of your Negotiable Instrument Act 1881, we have 3 negotiable instruments: promissory note, bill of exchange and check. Promissory note is defined under section 4, bill of exchange is defined under section 5, and check is defined under section 6. When it comes to the these negotiable instrument, they are simply a kind of document. They are the written document which can be used for the payment purpose, and that can be transferred from one party to another. Let's understand them one by one. So the first negotiable instrument we have is promissory note. Section 4 of Negotiable Instrument Act 1881 talks about it. So promissory note is a written document in writing. Promissory note is a document in writing, not being a currency note, but yes, contains an legal underwriting. That is, it contains the undertaking of providing the payment of a certain amount of money to a certain person on a certain date, and that document will be signed by the maker of the maker, or we can say the person who makes the payment to the other party. So promissory instruments is an instrument in writing containing an unconditional undertaking to pay a certain sum of money to a certain person on a certain date, by when also the maker will be signing the document. So let's say I am promising you that on 1st of January I will make payment of 50,000 rupees. So this is a promissory note. I am making promise to you. Acha, I have used one word, that is unconditional undertaking. It means if I have written on a promissory note that I will make payment of your 50,000 rupees on 1st of December or 1st of January, let's say, then I have to make that payment on 1st of January. No condition can be added here. I cannot write this kind of promissory note that I am promising to the X person that I will pay 50,000 rupees on 1st of December if there was raining on the same day, or if I will get my payment of the earlier consignment. No condition can be added. If you have said that you will pay on 1st January 50,000 rupees, you have to pay it. That's the unconditional undertaking is there in the promissory note, and that you have to take by yourself. This is unconditional undertaking taken by the person who have to make the payment, and the person have to sign the document. That's the promissory note. In promissory note, there are two parties. One who is the maker, and the another one who is the receiver. Okay. Now, second, let's talk about the bill of exchange, section number 5. So, bill of exchange is also a written document. Bill of exchange is also a document in writing containing an unconditional order to pay a certain sum of money to a certain person or the bearer of a document, or on the order of the bearer of a document by signing it by the maker. So now bill of exchange, I have said same. It is a writing document. It's pay a certain sum of money to a certain person or on the order of the bearer. And I have added one word, that is unconditional order. What does it mean? It means in the bill of exchange, you are giving order to another party, then make payment on this particular day. So, in the bill of exchange, more than 2 parties can be available. In the bill of exchange, you are not taking your undertaking by yourself. You are saying to the bank, like I have written 1st January 2024, 50,000 rupee will be paid to A, B and C. Then this is the responsibility of bank that have to be made. No such kind of conditions will be added by the bank that I will not be paying on 1st January or 2nd January or 4th January. No such kind of condition can be there. So now you are giving unconditional order. There should be no conditions. Unconditional order have been given to the bank. If it is written that on 1st of January, 50,000 rupee will be given to A, 20,000 rupee will be given to B and 50,000 rupee given to the C, then bank have to make payment to 3 parties, all the 3 parties on 1st of January. This is your bill of exchange. So bill of exchange and promissory note have only 2 difference. The first difference is there. In the promissory note, you have to take unconditional undertaking. Like you are making payment, you have to take unconditional undertaking. In bill of exchange, you are providing unconditional order to your bank. Second difference. In promissory note, there will be 2 parties. In bill of exchange, there will be 2 or more than 2 parties. Okay, so this is what we are talking about, the promissory note, bill of exchange, section 4 and 5. Now let's move to the section 6, that is your check. Now when we talk about check, check is defined under section 6. Check is simply a negotiable instrument. We can call check is a type of bill of exchange which is drawn on the name of a specified person. It will be paid on the order or otherwise. It can be endorsed by the person. So check can be endorsed. Like if I want to make the payment, if I want the same check to use to be make payment to the other person, I can do that. I can endorse it on the back side of a check. So endorsement means transfer of check to the another party. So that's a check. Check have 3 parties. First it will be drawer. Drawer means the person who makes the check, who issues the check. Second will be drawer. First is drawer. That is the person who is making the check. Second is the drawee. Drawee means the bank that will make payment. And the third is the payee. Payee means the receiver who will receive the money. So drawer, drawee and payee, these are the 3 parties in the check. That is maker, bank and receiver respectively. Okay. So now we have CTS as well, check truncation system. The check truncation system we have is under section 6(1) of Negotiable Instrument Act 1881 have been defined, which says that the physical movement of check have to be removed and only the electronic image will be used for making the payment of your check. Okay, so this was about all the topic. Now let's move forward with the MCQs and we will discuss in the form of MCQs now. So the first question is talking about section 131 of Negotiable Instrument Act. Act extends protection to the dash, to collecting bank, to paying bank, to drawee bank or to negotiating bank. Which of the following bank will get protection under section 131 of Negotiable Instrument Act? So this section gives protection to the collecting bank. To whom? To the collecting bank. The protection will be given by the Negotiable Instrument Act. So right answer will be A. Next. Second question is saying where a customer by a letter has advised the bank directing the banker not to honor, pay a particular check, such letter is called dash. What's this letter? First is saying letter of credit, second is saying stop payment letter, third is saying mandate, fourth is saying garnish order. Now let me know which of the following order is it. So you are a customer by a letter has advised the bank directing banker not to honor or pay the particular check. So this is what type of letter? It's very obvious, a stop payment letter that have been given by the customer to the bank that do not make the payment of this particular check. So right answer will be B. Okay, your right answer will be what? It is B. Now, promissory note is defined under dash section of Negotiable Instrument Act 1881. So under which section promissory note is defined? 4, 5, 6 or 7? And we have just discussed section 4 talks about your promissory note. So 4 is promissory note, 5 is bill of exchange, 6 is check. Do remember that. So right answer is 4. Now next. Bill of exchange and check is defined under dash section of Negotiable Instrument Act 1881 respectively. So I have just told you bill of exchange and check section number in the act, that is section 5 for bill of exchange, section 6 for check. It means right answer will be C. Okay. Now next. A check favoring Rajkumar or order is stolen. The thief endorsed the check as Rajkumar in his favor. The check is presented in clearing and paid by the drawee bank. The bank have made the payment of the check. True owner letter sent a legal notice to the bank. What is the liability of the bank? Is bank liable for this situation or not? So these are the 4 options in front of you. You have to answer what is the liability of a bank. So there was a check for the Rajkumar, and the check have been stolen. And the thief has taken a payment. The thief has endorsed the check as in his favor as a Rajkumar. So in that situation, bank also made the payment. So what is the liability of the bank? Bank is liable to make payment to the real owner or not? Let me know. So first is saying the paying bank will get protection under Negotiable Instrument Act. Second is saying a forgery does not give any right to the paying bank, hence is liable. Third is saying as per section 85 of the Negotiable Instrument Act, the paying bank is liable. Fourth is saying as per section 131 of Negotiable Instrument Act, the paying bank is liable. And the right answer will be the paying bank will get protection under this act in this situation. So right answer will be your A option. Okay, right answer is A. Next question. Payment in due course is defined in which section of Negotiable Instrument Act 1881? So we are talking about payment in due course. Due course means on the within the validity of a check, the payment should be made. It is defined under which section of Negotiable Instrument Act? 4, 5, 10 or 31. So you know it is not 4 because there is promissory note. It is not 5 because there is bill of exchange. So 2 options have been eliminated. It can be either 10 or 31. And the right answer will be your section number 10 talks about the payment in due course. So your right answer will be C option. Okay, right answer we have is C option. Next. A forged check is an dash. So forged check is your valid check, invalid check, dead or stale check. So right answer will be, if it's a forge, it cannot be valid. Dead check, something like that, no term is there. A stale check is the check when the validity of a check is expired. The validity of check is 3 months, and when the check validity have expired, you cannot make the payment of that particular check. So it is invalid check. Right answer is invalid. Forged check is your invalid check. B. Do remember, stale check is very important. Stale check is simply a check that has expired its validity. So when the validity of a check is expired, that is known as a stale check, and the validity of check is 3 months now. Okay. Now, banks slip prima facie evidence of certain facts as per dash section of Negotiable Instrument Act 1881 under section 145, 146, 147, 148. Which of the following section talks about this situation? A, B, C or D? Let me know the right answer, A, B, C or D, and the right answer will be your B, 146. Right answer is what? Section 146. Okay, next question is asking about crossing of a check is defined in which section of Negotiable Instrument Act. So there are three types of crossing. It has a general crossing, it has a special crossing, it has the account pay crossing as well. Hana? General crossing, simply there are two parallel lines will be there. In account pay crossing, in the parallel lines, that account pay will be written. In a special crossing, in the parallel lines, account pay with a particular bank name, it will be mentioned. So there are three types of crossing, and it is defined under your 123 and 124 both. So the right answer will be your D. Okay, A and B. So right answer will be your D option. Okay, right answer we have is D option, that is both A and B, 123, 124. Next we have section 131 of Negotiable Instrument Act gives protection for collection of dash. So we have seen that this act giving protection to which bank? To the collecting bank. In which document? Now you have to tell that. What document it is? Is it a bill of exchange? Is it a promissory note? Is it a negotiable instrument, or is it a check? In which document this will be provided? Okay. So the right answer for this question will be for the check. The protection against check will be given to the collecting bank. So right answer will be D. Good morning everyone, welcome to the official YouTube channel of Officer Survey 24/7. So first of all, let me know how are you all, and also those candidates who have joined this session, let me know is audio video both are okay, are we good to go? So let's start. And those candidates who are first time joining this session, I would like to inform you all that this is our session in which we are talking about your PPB, principles and practices of banking. So as you know, the JAIIB next exam will be in the May 2024, and the first paper will be IEIFS. Second paper will be PPB, third will be AFM, and fourth will be Retail Banking and Wealth Management. So these four subjects you have. Each subject have 4 modules, and if I talk about paper 1 and paper 2, I will be your mentor for paper 1 and paper 2. It means IEIFS and as well as the PPB. So when we talk about IEIFS, there are 45 units in 4 modules, and when we talk about PPB, there are 55 units in 4 modules. It means the biggest syllabus out of all the 4 subjects we have is in PPB. So the principles and practices of banking achiever series is going on morning 6 a.m. Monday to Saturday only on Office Survey 24/7, in which every day we are discussing one particular unit of your module A. So we have started from the module A, and module A is the biggest module of all the 4, because the single module covers 21 units out of 55. So now you can understand this is the biggest module. And if we talk about today's session, this is our class number 13. It means today we are going to talk about unit number 13 of your PPB, that is responsibility of paying bank. Okay, that's your module A, unit number 13. Apart from that, those candidates who have not joined the earlier session yet, they can check the recording that is available only on Office Survey 24/7. In the playlist section, you will find all the other sessions recording already available. So if you are preparing for JAIIB May 2024, so I would like to give you one suggestion, that is start early. A lot of syllabus is there, a different pattern of questions will be seen. About there are 4 subjects, each subject have 4 modules, and a lot of syllabus is there. So you need a proper 3 months minimum. I'm saying minimum, with a very dedication, consistency. If you are preparing, minimum 3 months is required to complete your syllabus. The basic, it means the conceptual study. Then you have to do the revision by yourself. Then you have to give the full length mock test. In the between of conceptual study, you can go with the topic wise test which is available in the Achievers batch. But for full length mock test, after the syllabus have been completed, the revision have been done, you can start your full length mock test as well. Apart from that, apart from these three activities, if we talk about the types of questions, you will see there can be one-liner questions, fill in the blanks pattern, match the following pattern, your statement based question, your case study based questions, your numerical questions. Around 6 types of questions will be there, and all the types of questions will be done only when you have a conceptual understanding. But yes, the practice is very much important. Until and unless you find out the way how to deal with the statement based question, how to deal with the case study question, how to deal with the numerical question, you won't be able to perform better, because the questions are lengthy now. And if the questions are lengthy, you need to have what? You need to have a proper, what we can call it, the proper way to attempt the paper, right? Because each and every question will need a different approach to be done. So let's say, for example, the elimination method, in the filling the blanks, in the match the following, in the statement based question, you can use the elimination method. That helps you out, and it will take a less time comparatively to cover your topic, or not topic actually, but the question. And if we talk about case study question, in that you have to think according to decision making power of yours. So the decision making approach you have to take in the case study questions. And in one liner questions, simply there is no option in the one liner question. If you know it, you know it, otherwise nothing else can be done. So every question need a certain practice of yours that will be helping you out to achieve better marks in the paper. Okay, so now let's move forward. This is very important, and PPB is a very huge subject, so do make sure you are focusing on it. So let's start. Responsibility of paying bank. We are talking about module A, unit number 13. So first question is asking about the law relating to the payment of checks and protection of a banker is contained in the dash. In which section, or in which act actually, this is, we are talking that law related to the payment of check, protection of a banker is defined. So when we talk about a check, what is a check? Check is a negotiable instrument. So negotiable instruments are those instruments which can be transferred from one party to another for the purpose of payment. Those are the negotiable instruments. And here check is a negotiable instrument because you can use check for the payment, you can negotiate it, you can endorse it from one person to another person. That's your check. Okay. So when we talk about check, it is defined under which section, which act? It is defined under Negotiable Instrument Act 1881. Section 6 talks about your check. So check is a type of bill of exchange which is issued by, or which is issued on the name of a specified banker. It can be paid to one person or on the order of the one person it can be paid. It means you can endorse the check. Endorse means you can transfer the check from one person to another for the payment purpose. That's your endorsement of check is. Achha, apart from that, the CTS also introduced. What is CTS? That is check truncation system. Check truncation system was introduced to stop the physical movement of check. We wanted to stop the physical movement of check, that is known as your, what we can call it, CTS, check truncation system, and it is defined under section 6(1) of your Negotiable Instrument Act 1881. Okay, so negotiable instrument means simply the instrument that can be transferred from one party to another for the payment purpose. Section 6 talks about check, section 6(1) talks about the CTS. Apart from that, we have promissory note that is defined under section 4 and bill of exchange that is defined under section 5. So we have 3 negotiable instruments. Promissory note section 4, bill of exchange section 5, checks section 6. Okay. Next. Second question is, a customer is bound to inform the dash about lost check leaves. To pay, to endorsee, to collecting bank. Hana, so you have to answer to whom the bank have to, not the bank, sorry, the customer have to define, have to inform, sorry. If you got a certain check and you have lost certain check leaves, and you have a checkbook and you have certainly lost certain leaves. So you, to whom you have to define that, to whom you have to inform that, so that no fraud or forgery or something have been done. So it should be done by a customer, it should be informed by a customer to whom? To payee. And payee means the receiver, the person who receives money. Endorsee means the person who endorsed check to another person. Collecting banks, who is accepting the check. It's not always the collecting bank will be paying the money, collecting bank simply accepting the check, and the drawee bank is actually the bank who is actually paying money from the account of the customer. So to whom it have to be informed? It have to be informed to the drawee bank. Okay, it have to be informed to whom? It have to be informed to the drawee bank. So your right answer will be D. Okay, next. In a joint account, if one of the signature is forged, then what? Let's say you had a joint account. Joint account means 2 or more than 2 people are having account in the bank. In the joint account, the signature have been forged. In that situation, the bank and the customer are equally liable. Second, only the customer is liable. Third, the bank is liable. Or fourth, no one is liable. So if the check is forged, now this is the responsibility of whom? This is the responsibility of the bank to check that the joint account holder signature is forged or not. If bank is not checking that, this is the liability of whom? This is the liability of the bank. Okay, only the bank is liable in this situation. So right answer will be C. Next, payment to be made in due course, dash. Payment to be made in due course means what? First, need not always be made to holder but can be made to his agent or servant. Need always to be made to holder but can be made to his agent or servant. Made to customer's agent or servant. All of the above are correct. So now you have to answer in this situation, payment in the due course. What does it mean? Payment in due course means simply within a validity you have to make the payment of a document. That's basically the payment in the due course means. Now, need not always be made to holder but can be made to his agent. It's saying need always to be a mat to holder. No, it's not mandatory you always have to make payment to the holder. Made to customer's agent or servant, it can be given to the customer or to him agent, or it depends. So right answer will be A. It is not required that the payment will be made always to the holder. It can be made to the agent or the servant of a customer. So the right answer will be A option. So payment in due course tells us that the payment should be done within the validity of your document, and it can be made, it can be done to anyone. It can be done to the holder or the servant of the holder or the agent of the holder. Okay. Now next. Acha, what is the validity of a check? I have told you, within a validity you have to make the payment. So what is the validity of a check? The validity of a check is, first, when we talk about, it is used to be 6 months. But from 2013, it has been changed by RBI and it is only 3 months. After 3 months, your check will not be a valid check. And if it's not a valid check, it means what? It means very obvious, you won't be able to get payment after the 3 months. So the validity of check is 3 months. Section 89 gives protection to the paying banker of a check for what purpose? For misspelled, amount in figures and words mismatch, materially altered but does not appear to have been so altered, or for sign of a drawer. In what situation or in what case the protection will be given to the paying banker under section 89? First, second, third or fourth. It will be in case of misspelled, amount in figures and words mismatch, materially altered but does not appear to have been so altered. And the last one we have for sign of a drawer. Let me know which of the following is correct. Okay. Okay, so it will be C, that it is materially altered but does not appear to have been altered. In this case only the protection will be given to the paying banker under section 89. Okay, so if we talk about that the amount is different in words and figures, in that situation the check will be dishonored, the payment will not be made. If we talk about the theoretical banking in the Negotiable Instrument Act, it has been said that if the amount in words and figures is different, you have to take the words amount right and accordingly you can make the payment. That's what the theoretical banking says. But in practical banking, the banker will always dishonor such kind of check. Okay, in case of misspelled, in case of amount mismatch, in case of insufficient balance in the account of the drawer, in all these situations, overwriting, signature is missing, date is missing, anything is there. In that situation, check will be dishonored. Okay, so right answer will be C. Next, which of the following is are correct? So we have 4 options here. Which of the following is correct? In a joint account, if one of the signatures is forged, then there is no mandate and banker cannot make payment. Second, in a joint account, if one of the signatures is forged, then there is no mandate and banker can make payment. Can make payment or cannot make payment? Both A and B or none? So it's very obvious, if your signature is forged, so banker cannot make the payment, no? So right answer will be your A option. Banker cannot make the payment. The right answer we have is A. Okay. Now the next question we have here is section 10 defines which of the following. So we are talking about the section 10 here. What is the actual section 10 is talking about? First, there are 4 options in front of us. First is saying section 10 defines payment in due course to mean payment in what? In accordance with the apparent tenure of the instrument in good faith and without negligence to any person in possession thereof under circumstances. Okay, under circumstances which do not afford a reasonable ground for believing that he is not entitled to receive payment. Then apart from that, section 31 says obliges that the drawee bank having sufficient funds of the drawer in its hand properly applicable to the payment of such check to make payment when duly required to do so. Both A and B, none of the above. Which of the following is correct? Okay, so which of the following is correct here? So we are talking about section 10 defines which of the following. Section 10 we are talking about. So section 10 is talking about payment in due course of mean payment in accordance with the apparent tenure of the instrument in good faith and without the negligence to any person in possession, therefore under circumstances which do not have what? Afford a reasonable ground to believing that he is not entitled to receive payment. So section 10 talks about that, that's why it's correct. Section B, if we talk about section 31, it also obliges that the drawee bank having sufficient funds of the drawer in its hand properly applicable to the payment of such check to make payment when duly required to do so. Okay, that's what we're talking about in this section 10 and section 31. Clear? So section 10 talks about your define payments in the due course. So right answer will be your C option. Right answer will be your C option. Now, section dash grants protection to a banker on his making payment of a check. So which section grants protection to a banker? Hana, protection to a banker on his making payment of a check. Section 85, 87, 88, 90. Which section is it? So if we talk about you grants protection to the banker on what? On his making payment of a check. It will be granted under section 85. So these sections are there. This is a very small chapter. Huh? This is a very small chapter. Paying bank responsibility is a very small chapter, but it have a lot of sections that you have to remember. That what section 85 is doing, what section 89 is doing, what section 31 is doing, what section 10 is saying. These kind of things you have to cover. So section 85 grants what? It grants protection to a banker on his making payment of a check. So right answer you have is B. Now, section dash lays down the criteria for payment in due course of cross-check. So, which section is it? Section 121, section 131, section 31 or section 11? Now, the question is asking simply that the dash lays down the criteria for payment in due course of a cross-check. In case of cross-check, we are asking about. Now, if we talk about the crossing, there are three types of crossing. The general crossing, that is, you have two parallel lines on the left side, left top of a check. That's a general crossing. Then we have account pay crossing. In the left side top, the account pay will be written between the two parallel lines. And there is a special crossing that the left side you will have two parallel lines in which it will be written account pay or particular bank's name. Let's say I have written SBI. So general crossing, account pay crossing, special crossing. These three types of crossing will be seen. Okay. So section which talks about the criteria for payment in due course of cross check, it is section 128. Hana, which section talks about this? Section 128 talks about the cross check payment in due course. So right answer will be your A. Good morning everyone, welcome to the official YouTube channel of Officer Sarah 24/7. So first of all, do let me know how are you all, and also let me know is audio video both are okay, are we good to go? So this is our session for the PPB, Principles and Practices of Banking. As you all know, we have started the Achiever series for your May 2024 paper of JAIIB, in which we are discussing each and every unit in a particular day for your PPB subject at 6 a.m. and for IEIFS subject at 7 p.m. from Monday to Saturday. So if we talk about the PPB, this is our class number 14 for PPB, in which we are discussing the questions regarding your module A. So we have started the series from the module A. So this is also a class of module A, in which we are having the 14th number class here. Okay, so before starting the session, those who are joining the session first time, I would like to inform you that we are having these session Monday to Saturday in the morning at 6 a.m. for PPB and in the evening at 7 p.m. for IEIFS. These two sessions are important for your May 2024 paper of JAIIB. As you know, the paper 1 of your JAIIB is IEIFS and the paper 2 is your PPB, and both the subject have a huge syllabus. So it is very important we start early our preparation, we start practicing the questions with the conceptual understanding, so that in the end time we won't be get confused like how to cover this much syllabus of the subject. Okay, that's why it is very important to start early your preparation regarding both the subjects. So in today's session, this is the class number 14. If you haven't seen earlier session, the recording is available. You can go to the playlist of Officers at 24/7 channel. There you will find 1 to 13th number class for your PPB. And same for your IEIFS, same for your retail banking and wealth management, same for AFM. So the same series is going on for your all the 4 subjects of your JAIIB, and all the batch, all the series of subject are going on similar way like we are having the PPB and IEIFS. It means every series had already given you 13 lectures. Okay, so let's start in today's session with the first question that is talking about, consider the following statement in terms of protection under section 131 is subject to satisfying conditions. So which of the following statement are incorrect, the question is asking. So you can see sorry, so you can see the question we have seen maximum in these series, that is a statement based question, like which of the following is correct, which of the following is incorrect. These kind of sessions we are practicing more because this have been seen in the paper. They are giving you the lengthy questions, they are giving you the questions with conceptual understanding. The whole paragraph will be divided into 3 to 4 statement, and 4 statement will be given to you. Out of that you have to find out which statement is correct and which is incorrect. So the same pattern we are practicing here. The question is asking about the section 131. So consider the following statement in terms of protection under section 131 is subject to satisfying condition. So which of the following statement is or are incorrect, you have to answer. The first statement is saying the collecting banker acts in good faith. Second is saying it acts without negligence. It receives payment by a customer. The check is crossed generally or especially to the collecting bank. So which of the following statement is incorrect here? Which of the following statement is incorrect here? A, B, C or D? Let me know. The answer for this question will be your okay. So the question is asking about protection you are getting from section 131. So the right answer will be your C, only third. It receives payment by a customer. That's not a kind of protection under the section 131 will be provided. Hana? So the right answer will be C, only third statement is the incorrect statement. So this is your right answer, C option. Clear? Now you can see simply the conditions for protection that have been given under section 131. It is first, the collecting banker acts in good faith. Second, it acts without negligence. Third, it receives payments for a customer. From a customer, not. You are not receiving payment from the customer. You have received payment for a customer. That's why your C option was right. That's why your third statement was wrong. Okay. Now the check is crossed generally or especially. Then it verifies prima facie genuineness of the check for collecting payment under the CTS clearing. Then it looks for any fraud, forgery, tampering that can be verified with the due diligence and ordinary care and is apparent on the face of the check to be truncated. So these are the conditions for protection under section 131 have been defined. Clear? Do remember all these conditions. Very important. Now, the second question is asking here, consider the following statement in relation to the condition to be satisfied for claiming protection under section 131. Which of the following statement are incorrect? First is saying the banker should act in good faith and without negligence in receiving payment. The banker should receive payment for a customer, act as mere agent for collection. The person for whom the banker acts must be his customer. The check must be bearer check. So these are the certain conditions written in front of you, and the question is asking which of the following statement are incorrect here in context to the claiming protection under section 131. So what do you think, which of the following is correct? Let me know. Okay. So the right answer for this particular question will be your only 4, that the check must be a bearer check. This is the incorrect statement in this context. So right option will be your D. The right option we have D. Okay, because these are the conditions in front of you. So the condition that to be satisfied for claiming protection under section 131, the first is correct, that the banker should act in the good faith and without the negligence in receiving payment. Second is also correct, the banker should receive payment for a customer, act as mere agent for customer. Then the third is also correct, that the person for whom the banker acts must be his customer. For this, the right condition is, or the correct condition is, the check should be one cross generally or especially to the bank. Okay, and the option we were seeing that the option was saying the check must be the bearer check. No, it should be cross check generally or especially. That's why the fourth statement was wrong in the option, in the question. So right answer was D. Now next question we have, under duties of a banker in India were obtaining introduction by an existing customer of the bank. So this was not always possible, especially for a newly opened branch. In such cases, the customer were required to get reference from which of the following? Known person in the locality, from their existing banker, either A or B or none of the above. So under duties of a bank, right? We are talking about that the banker in India were obtaining introduction by an existing customer of the bank. This was not always possible, especially for a newly opened branch. So in such cases, the customer were required to get reference from whom? So now if we talk about this introduction process have been totally stopped now. Reason, because now we have KYC. Now you have know your customer, so you do not have to go through with the introduction, है ना? But yes, if this case happens, then the reference will be allowed to get from the known person in the locality and from their existing banker. So it means right answer will be C. Okay, right answer is what? Your C. But now this introduction have been removed totally because now you are having know your customer. Okay, so this is the explanation. Duties to confirm the reference where the referee is not known or has given reference in absentee. So first is Banker India were obtaining introduction by existing customer of the bank. This was not always possible, especially when you have a newly opened branch. In this case, customer were required to get references from known person in locality and from their existing banker. So that's why answer was C, either A or B. Okay, now we have next question. So do make sure I have added the explanation. Now from today onwards, I will be adding the explanation in the next slide so that you will be able to remember or to understand the reason why this question was this, why the answer was A not D, why the answer was C not B. Okay, so that's why I'm adding the explanation so that you will have a combined study, what is right and what is wrong, and in place of wrong what should be there, because it will help you to have a proper study of concepts. Okay, now under the duty to follow the KYC norms under Prevention of Money Laundering Act rules, KYC direction of RBI, which type of account get waived off to obtaining such requirements of documents? So we know what is KYC, that know your customer. KYC is a process that each bank and financial institution have to go through so that they will know about their customer. Hana, this is very important to have. Apart from that, if we talk about money laundering, what is money laundering? Conversion of black money into white money is known as money laundering. And we want to prevent that process. What people are doing, they are converting their black money into white money by using the banking channel, by using the financial institutions channel. And we want to stop that, right? Apart from that, when we talk about this direction have to be fulfilled by each and every bank with each and every account. The question is asking which type of account get waived off to obtaining such requirement of document. Achha, apart from that, if you talk about the KYC, in KYC you have to give certain documents like proof of identity or photo identity proof, I can say, address proof and photograph you have to give. And the document which you are giving here is officially valid documents. There are 6 officially valid documents. Okay, so in the small savings bank account, you can waive off this KYC direction of RBI because these are the accounts which have been introduced or which are working towards the financial inclusion. To link more and more people with the financial product and services at an affordable cost, we have introduced this account, and that's why we are also giving a liberal situation or liberal condition in case of KYC documentation. And that's the only account where this direction can be waived off. So right answer you have is A. So you can see here, so duty to follow the KYC norms under Prevention of Money Laundering Act rules and KYC direction of RBI. First, under this KYC norm, the identity of the customer is required to be verified by obtaining an official valid document and PAN number. Acha, do remember, PAN number is not anymore an official valid document. We have 6 official valid documents and PAN number is not one of them. Okay. Now, what required, the address can be evidenced by obtaining a latest copy of electricity or telephone bill. Only for a small account, this requirement is waived. Obtaining introduction has been rendered redundant and requirement has been dispensed with. So now you do not have to give the introduction, and as well as in the small accounts, there is no requirement of providing your photo identity and the address proof. It have also been waived off by RBI, just to make sure that the people will be easily able to link with the financial product and services. That's why this have been done. Now, next question. Section 131A of Negotiable Instrument Act 1881 extends the protection granted to a banker while dash. While what? Receiving payment of a draft, making payment of a check, endorsing payment of a check, all of the above. Which of the following is correct? In which situation? So section 131 of the Negotiable Instrument Act 1881, it extends the protection granted to a banker while what? While receiving payment of a draft. While receiving payment of a draft, this protection have been extended to the banker. So right answer will be your A option. Next question. The condition for collecting bank to claim protection has been laid down under the dash. So under which act the condition for collecting bank to claim the protection have been defined? Is it Indian Contract Act? Is it Banking Regulation Act? Is it Negotiable Instrument Act? Or is it Banking Companies Act? So it's very simple. Regarding the negotiable instrument, you are talking about providing protection to the collecting bank. So it is defined under which act? It is defined under Negotiable Instrument Act 1881. Same for collecting bank, same for paying bank. The Negotiable Instrument Act it will be. So right answer is C. Next question. When a banker receives information that check for collecting is lost, the banker should dash. What a banker have to do when the banker got the information that the check for collection is lost? What's the responsibility of a banker here? First, inform the drawer. Second, inform the drawee. Third, inform the RBI. Exercise due caution while collecting the check. Which of the following will be the responsibility of a banker? So if we talk about a check, there are three parties. One is drawer, second is drawee, okay, and the third we have pay. So drawer is the person who is issuing the check, the person who is making the check, the maker of a check, the issuer of a check. Drawee will always be a bank, okay, and pay will be the receiver. Who is receiving the money is the pay. Okay, so question is asking here, the check is lost, check for collection is lost. Now what should be done by the banker? What should be done by the drawee it means? So it simply say it exercise due caution while collecting the check. Okay, so right answer will be D. It have to do what? It have to be more cautious about accepting the check or about collecting the check. So right answer we have is D. Okay, next question. Now, which of the following statement are not the duty of a bank? Which of the following is not a duty of a bank? You have to answer. So when we talk about bank have a banker-customer relationship. The banker-customer relationship defines like what kind of services the customer is taking from a bank. Second, we also have a banker-special relationship. Now when it comes to the special relationship, it defines what duties, what rights are there with the bank. Like right of set-off, right of appropriation, right of line, we can say. See, these are the things that the duties and rights of a banker will cover under the banker special relationship. So out of these, which of the following is not a duty of a bank? First, duty to open the account with reference and sufficient documentary proof. Duty to confirm the reference where the referee is not known or has given reference in absentia. Duty to follow the KYC norms under Prevention of Money Laundering Act rules and KYC direction of RBI. Duty to ensure crossing and special crossing. Duty to verify an instrument for any apparent defect in the instrument. Duty to take into account the state of customer's account. Negligence of collecting bank in collecting check payable to the customer. So out of these, which of the following is not the duty of a bank? A, B, C or D? Which of the following is not a duty of a bank? A, B, C or D? And your right answer will be D. Actually, this fourth point, that duty to take into account the state of customer's account, this is not the duty of a banker. Okay, so right answer will be your D option, that is option number 6. Okay, so the negligence of collecting bank in collecting check payable to the customer is not the duty of your bank. So right answer will be your D option. So you can see these are the duties of a bank. Hana, so here why we are saying this is wrong, you can see here the 7th statement is wrong here because it is saying payable to the customer. Hana, it should be payable to the third party. So these all are the duty of a banker: to open account with references and sufficient documentary proof, duty to confirm the reference where the referee is not known or has given reference of absentia, duty to follow the KYC norm under Prevention of Money Laundering Act and KYC direction of RBI, duty to ensure crossing and special crossing, duty to verify the instrument for any apparent defect in the instrument, and duty to take into account the state of customer's account. All these are the duties of a bank, okay, but not the duty payable to the customer. It should be payable to the third party. So that's why the 7th statement was wrong in the last question. Now, filling the blanks, we have in the filling the blanks, you have an option to use elimination method. You can use elimination method in any question. Hana, it will help you to find out the answer more quickly and more correct answer you will be able to give. So the first statement is saying here the account was not opened by dash of cash as was the usual practice, but was opened by dash of third party check. Now, by reading this statement, we are not able to understand what type of account we are talking about. So let's continue reading. The bank inquired with the customer who produced a dash letter from his employer authorizing him to deal with this check. Hana, to deal with what? To deal with the check. So now we can understand we are talking about that the customer is having account for what purpose? For depositing the cash. So the account was not opened by deposit of cash. So it can be either A or B, cannot be C. It can be D as well, Hana, as the usual practice, but was opened by dash of a third party check. Opened by what? Opened by deposit of a third party check. It means it cannot be true. It can be either B or D. Okay, it cannot be opened by deposit of cash. It can be opened by deposit of a third party check. So the bank inquired with the customer who produced a dash letter. What type of letter? The forged letter from his employer authorizing him to deal with the check. What letter? The forged letter. Okay, now the check was stolen by the customer and credited to dash account, to his account, his own account. It has been deposited. So the bank was held dash for failure to make necessary inquiries from the employer as to whether the customer who has an employee had in fact the necessary power to deal with the check or not. It means the bank have done the negligence in this situation. So bank will be liable in this situation. So right answer will be your B. Okay, right answer will be your B option. So this is the liability of a bank because here the bank have done the negligence. That's why. Okay. Now, next question is, in the absence of proper KYC document, the collecting banker can be held liable for collection of a fraudulent check on the grounds of dash. On the grounds of negligence, convenience. Then next we have crime or arrogance. Which of the following is correct? So in the absence of proper KYC document, the collecting banker can be held liable है ना, for collection of fraudulent check on the grounds of what? On the grounds of negligence. Like in the earlier question we have discussed, है ना, it will be seen that the negligence from the side of bank have been done. So right answer will be A. Good morning everyone, welcome to the official YouTube channel of Officer Saturday 24/7. So before starting the session, do let me know, am I audible? And also do let me know, how are you all? So this is our session regarding PPB, principles and practices of banking. As you know, every day we are having the particular topic questions to practice your module A for the PPB. If I talk about the principle and practices of banking, this is the biggest subject of your JIIB, and this is your paper 2. The paper 1 is Indian economy, Indian financial system. The paper 2 you have is your PPB. So PPB have biggest syllabus. It have 55 units. All the 4 subjects have 4 modules, but the units are different here. So in the PPB you have 55 units, and trust me, it have a biggest syllabus, but still this subject is kind of a subject that makes you feel that you are easily able to do this particular questions or do this particular subject. You can easily cover this subject, or you can have good marks in this particular subject, and that's what actually bankers are thinking, and that's what actually we as a mentor also thinks, that because the PPB, principles and practices of banking, is a subject that you guys are actually doing practice on. So you guys are already practicing certain theoretical banking in your practical life, like the certain instrument. When you read about the instrument, you are doing practical on that. You are performing NEFT, RTGS transaction, you are doing check clearance, you are doing promissory note, bill of exchange, factoring, forfeiting. All these things you are doing in the practical life, in the practical banking. But the difference is that sometimes the practical banking and the theoretical banking differs from each other, and when it differs, so we have to find out the difference between the both, and we have to understand like what should be there when you are going to answer the particular question and what you are actually doing in your branch. Let's say, for example, if I talk about, you have gotten a check in which the amount in words and figures are different. Now what you are going to do? The first case is that practical banking says that you will dishonor that check. You won't make the payment of the check and you dishonor that check, you return that check unpaid to the drawer. But the theoretical banking says that if there is a difference between amount in words and figures on a check, then you can take words as the right amount and you can make payment to the pay. You can make payment to the pay. But this is different. What you are doing in the practical banking, what you are doing, what the theoretical banking is saying, what the laws, legislations are saying, these are both different. In some cases, these are different. There are exceptional cases. But yes, so when we talk about the theoretical banking, it is a little bit tough comparative to what you are doing in a practical banking services. So as we talk about your paper of October 2023 and May 2023, so in May 2023 paper of PPB was very easy, it was very good, and people got 70 plus 75 plus marks in the PPB, right? But in October 2023 people or bankers, we can say, have faced a lot of issues in clearing the PPB subject. Now it is kind of a thing, when you heard this, like bankers are not able to clear this PPB subject, it somehow gives you the doubts, like why, what happened. So when we were taking analysis of your PPB subject, so we have seen that bankers are giving us the certain topic. This have been asked, that has been asked, CBS was asked, and negotiable instrument have been asked. Apart from that, responsibility of paying bank have been asked, responsibility of collecting bank have been asked, hundi have been asked. Like these kind of topics, they were telling us that this was there, and we were being very happy at the time of analysis that yes, we have covered all these things and we have taught all these things. So now our bankers have passed this subject. But in the middle of the analysis, we have find out a lot of bankers was there who got only 44, 43, 44, 45, or let's say less than 50 marks. So they somehow was not able to clear the subjects just because 2 or 3 marks difference was there, and it was there because the question was tough. The paper was tough, and the paper they have given for PPB was totally based on the case study. Maximum questions was the case study, and the case study questions judge your decision making power. Like they will create a certain scenario in your bank and will ask like, if this happened, what you will do? If this happened, what is the liability of a bank? If this happened, what is the liability of a customer? So they will create a kind of practical scenario in front of you and they will ask, in this scenario, what should be done? And that's where you have to go through your decision making power. And for that, somehow when you are studying that case study in the paper, now you will feel like, this I have done already in the branch, this situation I have already faced, so you will be easily able to answer. But there are certain situations which you have not faced, and that will be answered by as per your decision making capabilities. So for that, you need a conceptual understanding of the topic. You need to know the laws, rules, regulations, norms, and then what should be your decisions that will help you out to answer the question. So why I am talking about so much about this paper? Because I want each and every one of you being very practical, being very serious about this subject. Do not take this subject as lightly, because it was tough in October 2023. When you are studying PPB or when you start studying PPB, you will feel, I know this, I know that, I know that. But the problem is the language of the paper. The problem is the pattern of the questions they are asking. Okay. So do make sure, if you haven't started preparation for PPB, start it soon, because it will take a lot of time to cover the subject. So let's start now. This is our 15th number class. Already 14 classes have been done. And if you want to check the recording of those classes, that is available already on Officers Survey 24/7 playlist. You can go and watch from there. Now let's start today. This is the 15th class, and the first question of 15th class we are talking about here is, which are the following government services handled by banks? So we know RBI works as an agent of Government of India. RBI works as an agent for central government as well as for the state government. So what RBI is doing for the government? RBI maintain the capitals of government. It means RBI maintain the budget of government. RBI maintains the gap between expenditure and revenue of Government of India by providing loan, by issuing new currency, by issuing securities, and etc. So RBI has a responsibility to perform as an agent for the central government as well as the state government. Somehow the banks are also performing the certain services for your government, and what services the banks are performing, that you have to answer. And the options statement that have been given here is, first is saying that the collection of central excise and custom duty. Second, collection of direct taxes, namely capital gains tax, gift tax, income tax, wealth tax, and opening of public provident fund accounts. Third, opening of public provident fund accounts exclusively. And fourth, collection of rents for landlords. So which of the following activities or which of the following services are handled by banks for Government of India? Which of the following government services are handled by bank, that you have to answer? A, B, C or D? A, B, C or D? So if we talk about collection of central excise and custom, this is not a working of your bank. Then if we talk about your next, okay, that is talking about collection of direct taxes, namely capital gains tax, etc. Opening of public provident fund, and then collection of rents for landlords. If we talk about what kind of services are handled by banks, so these services can be handled by public sector bank as well as private sector bank. And it's not like only public sector banks can work like this. Also private sector bank can work on this. Right, so the public sector bank as well as the private sector banks are working on this. And the right answer will be your only 4, that is collection of rents from landlord. So right answer will be your C statement. It means C option, not this statement. C option, that is only 4. Okay. Now next question we have, one of the following statement is not true with respect to RTGS. So RTGS, you all know, real time gross settlement. RTGS maintained by RBI. RTGS and NEFT is still managed by RBI. IMPS is managed by your NPCI. Okay, otherwise NEFT and RTGS, they are managed by whom? They are managed by your RBI. Funds are transferable from the branch of one bank to the branch of another bank. Second, Only the corporate and government departments can avail of the facility. Third, the RTGS system is maintained and operated by RBI. Fourth, each participant bank of RTGS is required to open a dedicated settlement account for putting through its RTGS transaction. So out of these, you have to answer which of the following is not true with respect to RTGS. A, B, C or D. Not a true statement. Which of the following is not true? So RTGS is 24/7 service now. You can use the RTGS service 24/7. Okay, and RTGS can be utilized by everybody. So right answer will be your B. Only the corporates and government departments can avail this facility. This was not true. So right answer will be your B. Right answer is what? It is B. Okay, this is not true. RTGS is a 24/7 service now. Minimum 2 lakh and maximum there is no limit. You can transfer whatever amount you want in the RTGS. Okay, now next we have dash is a negotiable instrument and an order drawn by one branch of a bank instructing another branch of the bank to pay a certain sum of money to the order of a certain person. What instrument we are talking about? Is it bank draft? Is it banker's check? Is it money transfer? Is it electronic fund transfer? A, B, C or D? Which of the following is it? Dash is a negotiable instrument and an order that is drawn by one branch of a bank instructing the another branch. For what purpose? To pay a certain sum of money to the order of a certain person. And that's what, if we are saying it is an order drawn by one branch of a bank. So it is not banker's check, it is not money transfer, it is not electronic fund transfer, it is bank draft. So bank draft is drawn by the branch of a bank. So right answer is A. Okay, right answer will be your A. Next question. A dash is a financial institution that holds customer securities for safekeeping to prevent them from being stolen or lost. Then the custodian may hold stocks, bonds or other assets in electronic and physical form on behalf of its customer. And these are the 4 options in front of you. Trustee bank, custodian bank, paying bank and collecting bank. So which particular bank we are talking about? That's a financial institution that hold the customer securities for safekeeping to prevent them from being stolen or lost. A, B, C or D. Which bank is it? So a bank is holding customer security for safekeeping to prevent it from what? To prevent it from the stolen or lost. It's your custodian bank. What bank it is? Obviously it's a custodian bank of yours. Okay, that makes sure that your asset should not be stolen or something else should be done. Okay, so right answer will be your B. Custodian bank. Next we have DDs and BCs. Demand draft and banker's check should be issued with the account pay crossing if the amount is dash and above. So is it 10,000 and above, 20,000 and above, 30,000 and above and 40,000 and above? So the sign of rupee is not supported by this board. That's why it is showing you the box here, but it is rupee. Okay, it is rupee. So let me know which of the following is correct. Demand draft and banker's check should be issued with account pay crossing if the amount is dash and above. 10,000 and above, 20,000 and above, 30,000 and above and 40,000 and above. Which of the following is correct? And the right answer is 20,000 and above, that is B. Okay, so your DD and your banker's check should be issued with account pay crossing when the amount is 20,000 and above. Next, we have one of the following statement is not true with regard to a locker facility in the bank. Okay, we are talking about the locker facility in the bank. So these are the 4 statements in front of you. Achha, we are discussing ancillary services that is provided by bank. So we know bank provide a lot of services to us. After that, bank also provide ancillary services like the related services, like providing locker, safekeeping, etc. So which of the following here is not true with regards to a locker facility in the bank? First is saying in the case of a sole hirer of a safety locker, nomination can be made in favor of only one individual. Okay, in case of what? In case of sole hirer. Then second is saying a locker cannot be hired by a limited company, specified association and society. Third is saying in the case of death of a sole locker hirer where there is nomination access to, locker may be given to the nominee. Fourth, where there are joint locker hirers having a contract of locker hire with the either or survivor cause, and where there is no nomination access to, the locker may be given to the survivor in case of death of the one of the hirer. So what do you think? Which of the following is not true? So it's very obvious the second statement is not true. You cannot say that locker cannot be hired by limited company, specified association or society. Everybody can have locker. है ना? Every party can have the locker. So the right answer will be your B, because it is not true about the locker facility. So right statement, right answer will be your B option. Next. Nomination facility is defined section 45ZC2. So nomination in the different types of your instrument, of your banking instrument, your financial product and services, it is defined under which section? Section 45ZC2, which particular section? It is section 45ZC2, ZD, ZE or ZF, A, B, C or D. And the right answer is, it is still ZF. It means right option will be your D option. From your section 45ZC to section 45ZF, we have a nomination facility. So right answer is D. Okay. Next question. Next we have a customer is entitled to issuance of a duplicate DD in place of lost one provided dash. Let me know which of the following is correct. The question is asking a customer is entitled to issuance of a duplicate demand draft in place of the lost one provided dash. He gives due intimation to the issuing branch, payment of DD not already made by the drawee bank, then execution of an indemnity signed by both the payee and the purchaser of the DD, and all of the above. Like if you have lost your DD, or your fixed deposit receipt, in that situation what happened? It's very obvious the bank will issue the duplicate demand draft, है ना? But which of the following things should be done in that situation? First, he gives due intimation to the issuing branch. This is true. Payment of DD not already made by the drawee branch, that have to be checked. And third is obviously indemnity bond have to be signed. So right answer will be all of the above. So a customer is entitled to issuance of duplicate DD in place of your lost one provided these of the details. Okay, so right answer is D, all of the above. Next, a demand draft is issued by the bank to be valid for dash. And these are the options in front of you. A demand draft is issued by the bank to be valid for 12 months, 6 months, 3 months, none of the above. So the validity of demand draft as well as check both is same. The validity of check and demand draft, they both have same. Earlier it used to be the 6 months, but now it is not. Both check and demand draft used to have the validity of 6 months earlier, but now it is not. So what is right now? It is 3 months only. And after these 3 months validity, when this validity expires, it is known as a stale check. And when this validity expired, it is known as a stale check. What is a stale check? Simply when the validity of a check is expired. So right answer will be your 3 months. Okay, right answer we have is 3 months. Next. Implementation of electronic benefit transfer scheme is meant for which of the following types of customer? So electronic benefit transfer scheme was meant for which of the following customer? Is it pensioners only, high net worth individuals, low value accounts or disabled persons? For which type of persons the bank have introduced the electronic benefit transfer scheme? Or not bank have introduced, but implementation have been done in the banking sector. It was only for the pensioners? No. Only for high net worth individuals? No. It is for low value accounts. Okay, it is for low value accounts where we have implemented the electronic benefit transfer scheme. Clear? So right answer will be your C. Good morning, everyone. Welcome to the official YouTube channel of Officer Survey 24/7. So first of all, let me know how are you all, and welcome to the channel. So today it is the first session for your PPB Module B class. Yes, we have done Module A session. So we have started the Achiever series on 4th of December, and since then we were discussing about Module A, and today we will be starting for your Module B. This is your first class of Module B. If you haven't seen the sessions for Module A, do make sure you check the playlist, because class number 1 to 15 we have done the Module A of PPB. And if I talk about the PPB principles and practices of banking, this is a subject which is having the biggest syllabus for your JAIIB. It means if we compare all the 4 subjects, the PPB have biggest syllabus because it have 55 units totally. So all the subject have 4 modules, but if we talk about PPB in 4 modules, we have 55 units. After that, we have IEIFS subject that have 45 units. So these 2 subjects have a huge syllabus. So that's why accordingly we have to start preparation for this. So in PPB, the more weightage if we talk about, one second. So in case of PPB principles and practices of banking, if we talk about, the more weightage have been given to module A and B. Okay, because A and B module have maximum syllabus here. From unit 1 to unit 41, we have your module A and B only. From 42, we have seen the module C. So 42 to 55. C and D module, you can find 42 to 55 units are there in the module C and D. So you can say the huge syllabus is from module A and B part. That means 60% weightage in the paper will be seen from module A and B only. But what happened in October 2023, what the IIB have done in the 3rd shift of your paper of PPB, they have asked maximum questions from the C module, that is banking technology. So maximum questions have been asked from the banking technology module, in which your 3rd shift of your PPB paper. It's very obvious now that in different shift, the different types of question and the priority have been given by the IIBF. So if we say that module A and B have more weightage, still we can't depend on the only 2 modules. We have to cover each and every topic of yours. Okay, that is very important. So now let's start. This is our first class for module B, and you know in the PPB we talk about module B. It starts from unit number 22. So that's the unit we are talking today, and the name of the unit you can see here is Principles of Lending, different types of borrowers and types of credit facility we have. So this is module B, class number 1. If I talk about the overall unit number, that's the 22, because in module A 1 to 21 units are there, and module B, we have started from 22 till 41 units. Okay, so let's start. So we will be practicing certain questions, and in the end of the session you have to let me know that how many answers you have given correct. Before discussing the question, first of all, those candidates who have not seen these sessions earlier and who are joining this session for the first time, I like to inform you all that we have started this Achiever series from 4th of December. We have completed module A every day. In the 15 classes, we have completed module A, and from today onwards, we are starting module B. So if you haven't seen the module A sessions, you can go to the Officers at 24/7 YouTube channel, and there the playlist is available. Do check the playlist. All the sessions are recorded there. Okay, the recording of all the sessions are available. Apart from that, I will be your mentor for JAIIB, PPB as well as IEIFS. It means the paper 1 IEIFS and paper 2 PPB. I will be your mentor for both the subjects. Okay, so now let's start the first question. It is talking about here that the cardinal principles of lending are. So what are the cardinal principles of lending? You have to answer out of these. Safety, liquidity, diversity, purpose, stability, sturdy, profitability, and our options are all are correct except 1, all are correct except 6, and all are correct except 4. So you have to answer here, out of these options, out of these cardinal principle of lending, it's showing to you which of the following is correct? A, B, C or D? Which of the following is correct? So when we talk about cardinal principles of lending, except your C option, it means except your sixth option, all are the cardinal principle of lending. It means sturdity is not a cardinal principle of lending. So your right answer will be C option. All are correct, all are the part of your cardinal principle of lending, except the sixth option, that is the sturdy. Okay, so right answer will be here C. Next, second question is asking about the non-fund based limits are normally of 4 types. The question is saying that the non-fund based limits are of 4 types. First, bank guarantee. Second, letter of credit. Third, letter of authority. Fourth, underwriting and credit guarantee. And fifth is derivative. Out of that, you have to answer which of the following is correct. All are correct. Only 1, 2, 3, 4 are correct. All are correct except 3. All are correct except 2. So you have to answer which of the following all comes under the non-fund based limit. So if we talk about non-fund based limit, or you can call it a non-fund based credit facility. When bank provide loan, so it has 2 types of credit facility. First is fund based, second is non-fund based. When you talk about fund based credit facility, it means when actually the bank have to give cash. It means when actually bank is providing loan to the customer and giving money to the customer. Non-fund based facility is not where the bank have to give the hard cash. It is the facility where bank takes the guarantee or banks become the guarantor of the another party. That's your actually the non-fund based credit facility. So out of these, which of the following is correct? So the right answer is letter of authority actually is not the part of your non-fund based limit. All are true. So right answer will be all are correct except 3. Right answer will be your C, that all are correct except 3, that is your letter of authority. So option number C is correct here. Okay, now next question. Next question we have, bank guarantee is a contract involves different parties and they include which of the following? The applicant, the beneficiary, the bank. So if we talk about bank guarantee is simply a non-fund based credit facility that's provided by bank. Okay, it is what? It is non-fund based credit facility that is provided by bank to its customer. Acha, bank guarantee can only be active if the buyer, or we can say the person who have taken the product or something, have defaulted. So when the party defaults, in that situation only bank guarantee become active, otherwise there is no need of bank guarantee. Okay, so in bank guarantee, let's say there are 2 parties A and B, and the B party have to make the payment in the future. So bank has given guarantee to A here. Now in this case, when the future payment not have been done by party B, in that situation only the bank guarantee will become active, and on behalf of B, because B is not making the payment, bank will make the payment by taking from the B. Okay, so that's the only thing, that the bank guarantee becomes active only in case of your default. And the party involved are all are correct. The applicant is there, the beneficiary is there, the bank is there. So all are correct in context to your parties of bank guarantee. Okay, so right answer we have is all. Next, the risk under this activity involves the obligation of the banker to provide funds or pay in the event of the failure of borrower to raise money or to repay money. So question is asking that the risk under this activity, you have to tell out of this which activity this statement is talking about. So the risk under this activity involves the obligation of the banker. Now bank has the obligation, like bank have to make the payment, bank have to provide the fund, or bank have to make the payment in the event of the failure of the borrower to raise money or to repay money. So which of the following is correct? The derivative, the letter of credit, the bank guarantee, the underwriting and credit guarantee. In which case, this is the obligation of a bank to make the payment or to provide the fund. Is it derivative product? Is it letter of credit? Is it bank guarantee? Is it underwriting and credit guarantee? And the right answer is your underwriting and credit guarantee. If the bank have taken underwriting or the bank have taken credit guarantee, in that situation, it is the obligation of the bank that in case of failure of payment, bank have to make the payment. Okay, so right answer will be your D option. Next question. Which individuals are not eligible for borrowing from bank? First is person of sound mind, second is minor, third is disqualified person. And out of these three, which person is not eligible to have loan from the bank, to borrow fund from the bank? The person of sound mind, the minor, the disqualified person. All are correct, like all are not eligible. Only 1 and 2 are not eligible. Next is saying only second and third is are not eligible. Fourth is saying only first and third is not eligible. So out of these three, like the person of sound mind, the minor, the disqualified person. Minor means the persons who have not still attained the age of 18 years. That person is known as your minor. So which of the following is correct here? Okay, the right answer is your second and third. It means C option. Minor and disqualified person, they are not eligible to take fund from the bank. The person of sound mind is eligible. Okay, so right answer will be for this question is your C, that only second and third are correct. Option number C will be correct. Okay, next. Currently, as per companies miscellaneous rules 2014, the maximum number is dash for a partnership for the purpose of gain. Is it 60, 100, 50 or 20? So as per company's miscellaneous rule that is introduced in 2014, the maximum number is dash for a partnership for the purpose of gain. Is it 60? Is it 100? Is it 50? Is it 20? A, B, C or D, which of the following is correct? Okay, and the right answer will be here. That is C. How many members? The maximum number is 50 for a partnership for the purpose of gain is there. So right answer you have is C option, that is 50. Okay, next question. Next is asking the liability of the karta is dash, whereas the liability of co-partners is dash to their shares in the joint family state. So karta is the person who is the elder person and the elder male we can say in the family. That person is known as your karta. And the question is asking the liability of karta is what? Limited or unlimited? Whereas the liability of the co-partners is what? Limited or unlimited, that you have to answer. Who have what level of liability? In case of what? In case of their shares in the joint family state. So if the person is karta, karta is the means the manager I can say. In the Hindu undivided family, the karta have all the responsibilities. It means the first one will be unlimited. So it cannot be B, it cannot be D. Okay, so it should be unlimited. The liability of karta is unlimited. And when it comes to the liability of co-partners, it is limited. It means right answer is A option. So the liability of karta will be unlimited, the elder male of the family, and the liability of the co-partners is the family members. They have very limited liability in this case. So right answer will be your A, unlimited and limited. Next question. As per the number of members, company can be divided into dash. Private, public, one person. All are correct. Only 1 and 2 is correct. Only 2 and 3 is correct. Or only 1 and 3 is correct. So you have a members. Like how many number of members can be there in the company. So the members will be decided it as per the type of your company. If it is a private company, the members will be different. If it is a public company, the member will be different. If it is a one person company, obviously there will be one person. So A, B, C or D, which of the following is correct? A, B, C or D, which of the following is correct here? And your right answer will be all are correct. Now, on the basis of number of members in the company can be divided into private part company, public company or one person company. So, right answer will be your A, that is all are correct. Okay, next. The term dash denotes the requirement of the money by a manufacturing enterprise for financing of its day-to-day requirements. So next question is asking about that the dash term, and we're talking about, it denotes the requirement of money by whom? By a manufacturing enterprise for financing of its day-to-day requirement. Like whatever the expenditure the company have to do, the manufacturing unit have to do on the day-to-day basis to start manufacturing, or to, let's say we can say, to produce goods and services on a daily basis. What particular capital is required? Is it working capital? Is it fixed capital? Is it cash credit? Is it overdraft? So for day-to-day purpose, for the day-to-day activity of a manufacturing unit, what type of capital is required? A, B, C or D? And your right answer will be working capital. Whenever you heard about, or whenever you read about day-to-day requirements of a company, the day-to-day requirement of a company is working capital that helps the company to use or to have a daily expenses capital. So your right answer will be working capital. So the term working capital denotes the requirement of the money by a manufacturing enterprise for financing of its day-to-day requirements. And that's your A option. Okay. Now, next, choose the correct statement here. Out of these 5 statements, you have to find out the correct statement. First is saying, working capital loan is a form of borrowing where the payments can be made over a predetermined period of time in regular intervals. Second is saying, working capital loan is a loan taken out for finance routine business operations to minimize the shortfall in working capital. Third is saying the term loan may be short, medium or long term. Fourth, working capital loans are short-term loans. Fifth, term loan covers high-cost investments like business expansion, purchase of expensive plant and machinery, etc. Out of these options, you have to answer which of the following is correct. A, B, C or D. Which of the following is correct? So, correct statement is so first is saying all are correct. Second is saying 1, 3, 4 and 5 are correct. Third is saying 1 and 5 are incorrect. Fourth is saying only second and fifth are incorrect. So you have to answer out of all these which statement is correct or which is incorrect as per the options. Okay. So when we talk about here, first is saying working capital loan is form of borrowing where payment can be made over a predetermined period of regular intervals. Is it true? So the first statement is not true. The second is true, that working capital loan is loan taken out for finance routine business transactions. This is true. Term loan may be short, medium and long. This is also true. Working capital loans are short term loan. This is also true. Fifth is saying the term loan covers high cost investment, like business expansion, purchase of expensive plant and etc. Not true. It means first and fifth are incorrect statements in this particular question. So your right answer will be C option, that the first and fifth is incorrect. Okay, first and fifth is what? They are incorrect statement. So answer will be your C. Good morning everyone, welcome to the official YouTube channel of Officer Survey 24/7. So welcome to the channel, and also do let me know how are you all. So I guess you guys had a very good weekend. because it was Christmas as well. So let's start the session. As you know, every day, Monday to Saturday, we are meeting at 6 a.m. We are starting our day with the principles and practice of the banking session. So if you haven't seen the session earlier, we had already done the module A. We had the 16 classes of module A, in which we have discussed individual chapters of your module A. Then if I talk about from 25th of December, it means from Christmas, we have started the module B. So your module B starts from the unit number 22, because the module A covers your 1 to 21 units, and the module B starts from which unit? It starts from the 22 unit. Okay. So now today we are going to talk about the same of your class number 2 of module B. As you can see, module A sessions are all available in the playlist. If you haven't seen that, do watch the recording of module A. Okay. Now let's talk about module B. We had the first class on 25th. This is the second class, in which the topic of our will be appraisal and assessment of credit facilities. So in the last class, principle of lending was the chapter, that was the unit number 22 of your module B, and this is unit number 23 of module B, but the class number 2 it is. Okay. So appraisal and assessment of credit facility it is. So before moving forward to the question, I would like to inform you certain important things. The first important thing is that these sessions are going on Monday to Saturday in the morning at 6 a.m. for PPB at the and also at 7 p.m. for IEIFS, Indian Economic and Financial System, the paper 1 of your Monday to Saturday, only on offices at 24/7. So do make sure you are joining the both sessions. Apart from that, if we talk about, apart from that, if we talk about the sessions, particularly if you want a generic session, that is also available on the YouTube channel. You just have to go to the playlist, and everything is available at the single place. Okay. Apart from that, I would also like to inform you, like right now the Christmas offer is still going on, by in which you are getting 81% discount on all the batches, and on Mahapack you are getting 81% discount plus the double validity. So this offer is still going on, and it will be available till 12 p.m. today only. Afterward, this offer will be not there. So if you are thinking about, if you are thinking about like for example, what to study and what to do and etc. Like if you are thinking about this, then do check the application, or in the end of the session I will also let you know what the batch actually includes and how it is going to help you in your preparation. So if you are thinking about enrolling, do it before 12 p.m. It will help you to get the best discount. Now let's start with the first question, that is talking about the advantages of cash budget could be. The advantages of cash budget could be, first is saying borrower has to plan the cash requirement. The banker can spot a danger signal quickly. Banker can plan his resources to meet credit demand, all of the above. So if you have a cash budget, what benefit you will be getting out of it? If you have a cash budget, what benefit you will be getting out of it? A, B, C or D? Advantage of cash budget could be okay, all of the above. The cash budget, if you have cash budget, the borrower has planned the cash requirements. The second, the banker can spot a danger signal quickly. Third, banker can plan his resources to meet the credit demand. Like if you remember cash management system or cash management service, CMS1 was one of the unit of your module A that we have discussed, and the cash management service bank is providing to its clients, the corporate and etc. Why the cash management services became very important to the companies, to the corporate? Because it helps them to maintain the liquidity all the time in the economy. Like if any uncertain things happen and you need an immediate cash, it is available with the companies. That's why the cash management service became very important. Okay. Similarly, the cash budget will help with all of these benefits to the corporate. So right answer will be all of the above. Next, second question we have. In bankers' parlance, credit risk in lending refers to dash. So when we talk about the risk that can occur in a bank, we have a lot of types of risk. Credit risk is there, that is also known as a default risk. We have market risk, liquidity risk, interest rate risk, we have business risk, we have operational risk, we have systematic risk, we have systemic risk. Apart from that, we have your internal risk, right? Liquidity risk, etc. A lot of risks are there, and these types of risk can occur because of the different purposes. Like if I talk about market risk, it offers because bank has placed its fund in the different markets. Like bank invested its fund in the different market, and in the investment, bank have to face the loss because the market went to the loss. Let's say bank has placed its fund in the share market and share market has seen the downfall. The bank have to face the loss, and that's what we are talking about is the market risk. In liquidity risk, when bank is not capable of paying the liquidity at the time it is required, that's a liquidity risk. Interest rate risk, whenever there is a changes in the monetary policy rate or in the interest rate of market, whatever problems bank is facing, that is the interest rate risk. If we talk about the credit risk is simply when the bank has given loan to the customer, but the customer is not repaying the installment, principal and interest amount on a time and is not repaying the loan and have created a default. That is your credit risk. So the fourth option is saying default of banker to release credit to the borrower. No. Default of banker in maintaining SLR? No. Default of repayment by a borrower? Yes. And do remember, the credit risk is also known as a default risk. The credit risk is also known as what? The default risk. So the right answer will be your A. Okay. Now, what are the sources of working capital? Now you have to answer what are the sources of working capital. Now, when you talk about working capital is simply that is required to perform day-to-day function. And now working capital means what? The capital which is required to function on a daily basis, on the day-to-day basis, that is your working capital. Clear? Like first is saying credits, unsecured loans plus deposit, bank borrowing plus advance payment, net working capital, and all of the above. So what do you think, which of the following is here is correct? What are the sources of working capital? So working capital simply means the capital which is required for the day-to-day transaction of your business. Okay, and the right answer for this particular question will be all of the above. The trade credit, unsecured loan, deposit, the bank borrowing, advance payment, the net working capital, all are your sources of working capital. So right answer is D. Okay, next we have net working capital means dash. Net working capital means dash. First, current asset minus current liability, owned fund minus goodwill, use of asset plus source of fund, and none of the above. So net working capital is what? It's very obvious. Working capital is the capital that is required for the day-to-day purpose. That's the working capital. And when you calculate net working capital means how much remained with you. How much capital remained with you is your net working capital, and it is what? The current assets minus the current liability. It means right answer is A. Okay, the current assets minus current liability is your net working capital. Clear? So right answer will be your A option. Current asset minus current liability. That's a net working capital. Now, next question we have term loans means loans dash. What is the meaning of term loan? What is the meaning of term loan? So first is saying payable over a period of 1 year to 10 years. Repaid in installment over a period, and utilized for acquisition of fixed asset, all of the above. So what do you think? Which of the following is correct? So the term loan means loan, which of the following? A, B, C or D? So if it is a term loan, it definitely will be a long term. When you are giving a term loan, it will be long term loan because it fulfills the long term requirement of the equipments and etc. for the company. So when you talk about the term loan, is it payable over a period of 1 year to 10 years? This is true. Is it repaid in installment over a period? This is true. Utilized for acquisition of fixed asset? This is true. Now, what are the fixed assets of a company? Simply those assets which belongs to the company and they are kind of a fixed, like property, the plant of your, the machineries, the equipments. These are the fixed asset of a company. Okay, so right answer will be D option. Right answer here will be the D option. Hope clear. Now, next question we have that banks adopted which of the following method for assessment of working capital requirements of their client? So it's very obvious when bank is providing loan to the customer, bank always check everything. The credit worthiness, the reason why you are taking loan, the purpose you are taking loan. And if you are taking a working capital loan or you are taking a term loan, in that situation, bank also check your balance sheet of the business, right? Like it should be good to give loan to this particular business or not. Now here we are talking about banks adopted which of the following method for assessment of working capital requirement. So working capital requirement is your day-to-day requirement of business. That's your working capital requirement. And here, turnover method, operating cycle method, maximum permissible bank finance method, and the cash budget method. Out of these four methods, which method will be utilized to calculate your working capital requirement? A, B, C, or D? Let me know. A, B, C, or D, which of the following is correct here? And the right answer will be all of the above. There are four methods that used by bank for the assessment of working capital. Okay, like how much working capital will be required by the client can be measured by four methods, and on this you will find numerical in the paper. Definitely one numerical will be there from out of these four methods, that is turnover, operating cycle, maximum permissible bank finance, cash budget method. These are the four methods to do what to the assessment, to do the assessment of working capital, right? And definitely from one of these methods you will find a numerical in the paper. That's confirmed. Minimum one numerical will be there. Now, how to solve numerical, what kind of numericals it will be, this we will discuss in the advanced question classes. As you know, we have done the advanced classes of questions, Hana. Similarly, we will do here as well. So, in that, I will let you know what kind of questions will be there. Okay, so do make sure if you are doing a self-study as well now, do make sure you include numericals in your preparation. Very important. Numerical questions will be there in PPB, in IEIFS, in AFM, in retail banking and wealth management. All the four subjects covers your numerical questions. In IE, but if we talk about, I do not know about retail banking and wealth management much, but yes, I would say in your PPB, IEIFS, the numericals will be very easy. Once you have understood the numbers, like how to calculate, or if you understood the method, the formula, that's sufficient. The direct numericals will be there. You do not have to worry that much. So the kind of questions that will be numerical question, it's a easy answer for all of you. Okay. So right answer is all of the above here. Now, next question we have. The capital required for a business enterprise can be classified under dash main categories. So next question is asking about the capital required for a business enterprise can be classified under dash main categories. 4, 3, 2 or 1. What these categories are? 4, 3, 2 or 1. Let me know the answer. Okay, so the capital required for business enterprises, it can be classified into two main categories. How many main categories are? Two main categories. So right answer is C. The first category we have is fixed capital. The first category we have is fixed capital, and the second category, you know, that's a working capital. Fixed capital and working capital, these are the two types of capital that we have in your capital required for business enterprises category. So it can be divided into two parts or the two categories that's in front of you, fixed and working. So right answer is C. Okay, your right answer will be C option. Next question. Next is talking about that there are 7 aspects, that is 7 C's for ascertaining it includes. How? Which of the following? It includes which of the following C's? The credit worthiness, the character, the capacity, the capital, the collateral, the conditions, the cash flow. So out of these 7, which will be included in the 7 C's, or you can say 7 aspects or 7 C's. Which of the following is a part of 7 C's? A, B, C or D? Is only 1, 3rd, 4th and 7th is a part, or all are the part? Only 6th and 7th are the part, all except 4 are the part. So you have to answer which of the following is the part of the 7 C's, or you can call it the 7 aspects. A, B, C or D. Okay. So the right answer for this particular question will be your all are the 7 aspects or the 7 C's of ascertaining. Okay. So the credit worthiness tells you about like your credit history, how much better, or not the better, but how much loan you have taken and how much you have returned. Like have you done any default or credit fraud, है ना? Have you created any kind of default or fraud in the banking sector or any financial sector? That will be checked with the credit worthiness. The character we have seen very basic. Capacity, capital, collateral means securities you're talking about, condition, cash flow, etc. So right answer will be all. All are the part of the 7 aspects. Okay, it means right option will be B, that is all. Okay. Now next we have question that is talking about to meet the cost of the project, which of the following sources of finance are available. So whatever costing of your project is, cost means the money you have to spend in the in the particular product process, so that you will be able to earn return on that. So to meet the cost of project, right, the sources of finance available out of this are, first we have share capital, term loan, debenture capital, deferred credit, incentive source, miscellaneous source. Which of the following is correct? A, B, C or D? And the right answer for this particular question will be, answer is C, all are the part. Like for share capital, by purchasing your share, it can provide you the capital, like company can issue its shares and raise capital from the market. Then term loan, company can take a term loan from the bank. Debenture capital, company can issue a debenture. Debenture is the loan instrument. If it means if company is issuing debenture, the company have to make return of the same amount of money plus the interest in a certain maturity period. Okay, that's your debenture. Now deferred credit, simply you can allow them the credit. You can take credit in installment pattern. Okay. Then incentive source, you can earn incentives on, and the miscellaneous sources are there. So all these are the sources from where the fund can be collected for the cost of your project. And the cost means the expenditure you have to do in your business. That's the costing. So right answer is your C, all. Okay, so let me know first here how many answers you have given correct. because this is your PPB. A lot of things you will feel like you heard about it, you read about it, you have done in the bank practically. So this is a simple subject, but number of questions they are asking from here is a kind of we can say case study questions are maximum you will find, and that's depends how to answer the question, because if you have getting you are getting a lot of case study question in which first you have to have the conceptual understanding, like you should know what check is. Let's say on check the certain case study have been given, first you have to know what check is. Second thing that have to be remembered by you is, after knowing what is check, the second thing that you have to remember is like the acts, negotiable instrument act, what section is defining that, etc. And the third, your decision making power. So first your concept, second your theory related to the particular term, and the third will be your decision making power. These three things are required to answer the case study question. And in PPB in October 2023, maximum questions have been seen from here only. So do make sure you are practicing properly the PPB. Okay. Now these are the batches which are available for all of you, and I was telling you like conceptual classes, class PDF, recording, topic wise test, full length mock test, ebook, everything is available is in the Achievers batch. All these benefits are also available in the Mahapack, but in Mahapack the additional benefits are there of first. All the upcoming batches will be enrolled automatically. You do not have to pay for each and individual batch. Then all the batches, all the subjects, mini and Maha marathons will be available here in the Mahapack. And right now, because of the occasion of Christmas, you are getting best offer deal. So how to enroll? First download their 24/7 application, then go to the home page. Here you have to select the exam category, that is JIB, CIB, click on that. Then go to the May 2024 JIB. Click on the view all option. When you check, the Mahapacks are available, topic wise, subject wise batches and the comprehensive batches, everything is available here. How to enroll? Whatever batch you want to enroll, just click on the batch, do check the offering, check the validity, click on the buy now option. If you use the code XMIS77, it will give you only 77% discount. So for maximum discount, use the code Y496, apply this, you will find 80% discount here, but that's not sufficient. That's not only it is, you will get 1% additional discount as well if you use the coin. So 81% discount, 1 year validity. By using the coupon code Y496, you will get the benefit of all the batches. Okay, all the batches will be available for all of you by using this code at 81% discount and double validity. And the process to enroll for any batch will be the same. Now, apart from that, if you want to keep joining the YT session, the YouTube sessions, for that you have to subscribe the channel Officers Study 24/7 and press the bell icon so that all the upcoming sessions notification will be given to you properly. And for PPB, you have to join at 6 AM. For IE, IFS, you have to join at 7 PM. These are the two important timings of your paper 1 and paper 2. Okay. Apart from that, in any other session, in any particular session you are watching about IE, IFS or PPB, if you have any doubt, you can ask your query in the comment section. I keep checking the queries and I will definitely answer you. Okay. So this is all for today. Let's end the session here. See you all in the evening at 7 PM with the IE, IFS session of your JIB May 2024. Thank you everyone for joining the session and take care. Achha, one more thing, this offer will be available till 12 PM only. If you want to enroll, do it soon. Take care everyone.